Let's take a look now intraday algorithms here. This is extremely straightforward. 9:37, we already saw this coming. 9:37 was here. This was 9:37 a.m., right? Because more importantly, you see the pink liquidity forming. So identifying that pink liquidity was so crucial. And just take a look for yourself how beautiful this is. Just take a look for yourself. This pink liquidity right there. Grabbing on the way up. Look at how penny perfect it is on the wicks. You notice, look at the wicks. Bouncing off pink absolutely perfectly right there. And this is not it. More importantly is this particular magenta and orange. Now I talked about this magenta. 9:49, we already charted the magenta. And I want you to see for yourself. This magenta prevents you from going short. It prevents you from going short. And take a look. Penny perfect. Now this is 9:49. 9:49 was here. We identified magenta already. So absolutely no reason to further short this because magenta was protecting the support. And I talked about this very juicy pink liquidity right there. Absolutely beautiful. Now, I wasn't around for the second half of the day, but this is more than enough. All within one hour of the day, isn't it? I told you at 9:51, be careful of the inverse head and shoulder pattern. Inverse head and shoulder pattern, 9:51 was here. I told you to be careful of this while being careful of the magenta, and it turned into penny perfect support. Now, if you're able to have the skill to be able to determine scenarios, literally a handful of scenarios, a handful, sometimes less than 3, 1 or 2 scenarios before it happens, and the fact that it's penny perfect to guide you in managing your risks. Now, this is important because having something penny perfect will help you manage your risks even better. There are people who teach you how to trade. They want you, for example, to just take a call here, right? Or call anywhere, and they want you to have stop loss here. So essentially, they want you to have a stop loss here, and they tell you a target that is arbitrary. They have no idea about the target. They just tell you, hey, take the target at a certain high or take the target at a certain level, and it's not accurate. Most of the time, you don't hit the target, so you turn green unrealized, and then you lose it all. But can you imagine with precision like that? So the point is, you see the precision like that, right? And if you manage to take a call here, for example, just for example, and I want to run through the analysis here, and you literally have penny perfect stops. Can you imagine how much will let's say you reach this point ideally? Look at the risk to rewards. Here, this is your risk to rewards here. 30x risk to rewards. All because you're able to be managing very, very tightly your risks. 30x right here. And this 30x is non-leveraged. If you were to leverage this, especially with trading 0-day to expiry options, this will be absolutely incredible. So you must understand your risk to rewards is not necessarily determined by your contract value. And for most traders on YouTube that teaches you junk, to be honest, they want you to be able to sustain a stop loss of what? 1 point, 2 points? Some of them, they want you to hold on for 4 or 5 points. Because to them, the entire contract value is your stop loss. And you're going to lose big. Because especially when you're trading 0-day to expiry. But in this case, if you can be as precise, that your stops are as precise as 0.1. Now, this may not entirely be realistic to you if you're a newer trader. So maybe you allow it to breathe a little, 0.3, 0.5, and it's still very good. Let's say we have 0.3. And look, your 0.3, for example, all the way to the low of day, all right? And your risk to rewards, say 0.34, yeah? Your risk to rewards is still 10x. See the power of that, and this is not even threatened. So this is just a statistic for you, a metric for you. So you have to understand your risk to reward, very importantly, it must be as precise as possible. And it is done possible because you have penny perfect algorithms like that. Not just about trying to catch the directional move. Remember, it's not about where the market is going. It's about finding profits in the charts and managing your risks. Because I talked about this again before I left for the day at 10 o'clock. I mentioned